Investors are sensitive to good corporate governance. This is something that SEBI Chairman Ajay Tyagi as well noted in a press conference earlier during the day. But of course, nowadays it's not just corporate governance. As I was saying earlier, a lot of us have gotten very sensitive to environmental factors as well. Many of us try to limit the usage of single-use plastic, try and go organic, among many other things. And hence, when we choose out an investment style, or at least many of the millennial investors want to choose out an investment style, they want to choose something that goes with their value styles and value systems. Enter ESG funds. E stands for environment, S stands for social factors, and G stands for governance. But what's the opportunity here? And are they indeed lucrative and profitable options? How can you as well go about managing your ESG investments? I have with me Harsh Jain, co-founder and COO of Groww, which is a digital platform for managing and investing your money. Harsh, thank you so much for joining us on The Money Show. So ESG is something that you guys have done a lot of research on. I must say that I think back in India, there's not much of information available. There are few funds, there are few companies that really do follow this ESG, value style as such. So let's start off with an introduction. What exactly does ESG mean?
Yeah, thanks Mubina for inviting me for the show. ESG funds, and ESG as a term means environment, social and governance. So these are these set of companies who are following very strictly the guidelines for being a very environmentally safe companies, socially responsible, and who are having a governance which is very transparent and which is very ethical. So these companies who are following all these three criterias are become part of a ESG group. Now, as you're saying, there are funds who have been investing in these companies. So the criteria is very simple. The funds who are investing in these companies become the ESG funds.
Okay. Now, like I was saying, in India, there's not much when it comes to ESG. I think options as well are limited. Harsh, what if I want to sort of invest in something that is compliant with ESG, what are my options available in India?
So right now there are very few options, as you rightly said, because the whole concept of investing this is also related to kind of impact investing, or this is socially responsible investing, is very new to our country. There are few mutual funds which are available who have so there was an existing mutual fund by SBI who have renamed and strategized that to an ESG fund, and also there is a new fund from Quantum which is a ESG fund. There are few more AMCs who are launching these funds in these categories. So the way these funds are categorized is this falls under a thematic fund in the mutual fund categorization. But these funds are very well defined as being the ESG funds. So the kind of companies they are investing in are passing through all these three criteria. So as an investor, if you are inclined to invest in these kind of companies, so you have an indirect way which is through the mutual funds.
Okay. Harsh, could you give us some examples of what are these ESG compliance companies in which these ESG funds invest, just to give our viewers a better sense of, what exactly could you call an ESG compliance company?
Sure. So, Mubina, the way this is done in the selection is actually not picking the companies. It's also equally important to discard the companies from the list. So the way mutual funds have picked these companies are based on, okay, so this is the list of the total companies, and the minus they review each company for their practices. So for example, if a company is into the business of alcohol or tobacco, or they are in the business of chemicals but they are not fully compliant, or they still have some cases which are outstanding, or certain issues which are not yet fully answered, so they will remove these companies from the list, and then they'll come up with a short list. So if you look at a lot of banks, if you look at any of these mutual funds, their holdings are the list of the companies which are compliant under the ESG category. And these are largely the companies who are not who are doing the business which are not falling in any of these categories that we spoke about. So that makes a list of companies which will be easy for them to call as an ESG companies.
So it's more like the method of elimination, like for example, no tobacco companies, no liquor companies, or no polluting industries, basically.
Yes.
And the companies that are not these can stay in the fund, or can be called an ESG compliant firm. Now, interestingly, right now in India, Harsh, I suppose the main focus has been on the G as opposed to the E and the S, because we've seen a lot of governance issues crop up in the last 1 year, and hence I suppose fund managers, regardless of them being an ESG fund or not, are focusing on the G bit especially, and they want to ensure that a company that they pick for their fund is compliant with good corporate governance practices. That's something that Ajay Tyagi as well flagged off as being a key determinant for investors to pick and choose a stock. Now, let's talk about the profitability, because at the end of the day, when you're making an investment, you do want to see some decent returns come out of that, right? So Harsh, an ESG fund, let's just take the two examples, the newly launched Quant fund and the SBI ESG fund, which has been renamed and rebranded to become an ESG fund. Are they lucrative investment options? Do you think that because they consciously stay away from certain sectors, they may have sort of an opportunity loss, if you could call it that?
So, Mubina, the way investments are looked at, there are two different criteria here we are talking about. One is the profitability and another is the social good. So when you're looking at profitability, you're of course looking for a good governance, but then the other factors which come into the play for choosing the companies which are falling in this criteria are not necessarily purely profit driven, because the goal there is to invest in the companies who are environmentally safe, who are socially responsible, who are following a very good governance, have no links to the products or the categories where people would not feel it is ethical to do those businesses. So profitability is a very different criteria. Having said that, looking at the performance of these funds over past few months and comparing with the benchmark and all, they're not falling very sharply behind or sharply ahead of it. So I wouldn't really judge these categories on the returns or the profitability that they can get for you. But it's always a good idea as an investor, if you are inclined towards investing in these ESG companies, then you do it, but then you can also keep a part of your investments in the regular investments if you are okay to invest in the other companies also, because diversification will always help. These are very small funds, these are very new concept, we don't have too much data, we don't have long history of commenting on how the performance will scale just because these are investing in ESG companies.
Harsh, have you seen increased interest, by the way, by Indian investors in these funds? I mean, we got all the monthly inflow, AUM inflow data, etc. Has there been increased popularity in these funds?
So, Mubina, no. It is very early stage, and any fund, or this is a category, not just a fund. So the whole category itself is very new. People are not aware about it. The whole concept of ESG, not too many people are aware or talking about it or asking. Having a fund in it and be able to invest in it is relatively new concept. I think it will take time before this whole concept will become more popular, and then you will see a lot of funds and a lot of options of investing will also come out. So it's very linked. User, like all the people who ask, and then you will see the companies who will build those options also. So it's very early stage right now. There's not much traction to answer the question.
It's too early right now to be able to answer this question. And yes, like Harsh said, if you are worried about returns, it's always good to sort of diversify within your funds as well. Go for the regular funds if you're not too staunch with respect to your investments as well, adhering to your lifestyle and your principles and your philosophy. Then make sure you buffer it up with other funds as well, and like hopefully on the environmental, social governance front, things will improve. Even for the non-ESG compliant funds as well. All right. What about the risk factor? Because like you mentioned, we are deliberately excluding certain kinds of companies, and we are concentrating it on a certain kind of companies that are ESG compliant. So would there be some fear about, a concentration risk or anything like that? Or again, there is adequate diversification within these funds so as to mitigate any such concentration risk?
Yeah, so maybe a very, very good question here. So while we are diversifying across the industries, but definitely you're putting a criteria to concentrate the selection of the companies. So the risk, if I have to compare with a index fund, then obviously there are lesser companies, so the risk is little higher. But this falls into a thematic category in SEBI definitions of the mutual funds also. And as a thematic category, you will see that there is a higher risk than a general category where this is just a large cap or a multi-cap fund. Having said that, since there is no criteria in the choosing the industry, so the industry risk is not here, because you are able to diversify across the industries and you are able to pick companies, best companies from any industry or sector that you wish. That is why there is a risk of lesser companies concentrated, but the diversification risk is not there.